Fears of slowing U.S. economic growth send global stock markets plunging today. The Dow saw its worst day since 2022.
WGN's Courtney Spinelli with perspective from financial experts on what this all means. Courtney.
Micah and Ray, many financial experts say a pullback in markets happens more often than people may think, so it's not time to panic just yet.
There's just an emotional sell-off this morning, and that's the way markets work.
Woes on Wall Street as U.S. stocks plunge and a global sell-off deepens. Investors around the world worrying the U.S. economy may be in worse shape than expected.
Anytime expectations are misaligned with prices on Wall Street, we get a bout of volatility. Some people call it a dip, some will call it a correction, but it's literally that simple.
Monday's meltdown follows a new report showing weak readings on the U.S. job market, coupled with a 4-month decline in U.S. manufacturing and a fall in construction spending. Investors calling on Federal Reserve officials to cut rates, something that rarely happens outside of scheduled meetings. Just last week, Fed Chair Jerome Powell saying it could be on the table as soon as the next meeting in September.
The broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
A rate cut would make it easier for U.S. households and companies to not only borrow money, but to also boost the economy. It's something that could take some time to see if and when it happens.
That's got implications for savers, implications for investors, but I think the Federal Reserve is going to be ahead of this. I think they knew the slowdown was coming.
The leader in tumbling stocks, big tech, which sent the market to record highs in the first half of 2024. Nvidia, Apple, and Amazon faring the worst as investors sold off their shares. Financial experts say what's likely to happen next should make long-term and intermediate-term investors feel a bit more comfortable.
I think we're going to see some downward movement in the days to come, but I think the bottom is actually relatively close to where we sit today.
Financial advisors say pause the panic and try to avoid any decisions that could hurt long-term growth, like selling off assets. Not only is there a 10% pullback from all-time high prices happening on average every 12 to 14 months, but also
there's a seasonality.
While former President Donald Trump took to social media, placing the blame on the vice president, calling it the Kamala crash, experts say a slowdown during election season isn't out of the ordinary, especially in the months of August, September, and October.
Typically, as long as markets were up still for the year going into an election, things tend to firm and move positive coming into the end of the year. I think that's exactly what this market's on pace to continue to do.
Now, the U.S. dip followed a more than 12% drop for Japan's Nikkei, marking its worst day in almost 4 decades. In a sign of hope, Japan stocks rebounded sharply Tuesday local time as other Asia-Pacific markets also opened higher. Back to you guys.